What stocks managed to defy the downward pull of the averages today? How about Hain Celestial, the natural and organic food maker behind Celestial Seasonings, Earth Best, Terra Garden of Eden, Health Fat Valley. They're all right behind me. Take a look at them. Greek God's Yogurt, host of other brands. Here's a name that had been down and out for some time now. Starting last August, Hain Celestial saw its stock get obliterated. The market turned against its former fast-growing darlings. Hain tumbled from all-time highs of $70 down to 33 and change in its lows in late January, part because the company reported some mixed results in an environment where anything less than perfect, well, was being savaged. However, Hain managed to rebound back up to $41 as of yesterday, and then this morning, the company reported an excellent quarter. It sent the stock $3.80 or more than 9% higher, despite the weakness in the averages. The company delivered in-line earnings, but its revenues came in higher than expected, up 13% year-over-year, and it generated some solid organic growth, which is what we're really looking for. However, many of the analysts who follow the company thought the big headline here is that management unveiled a major reorganization, one that's going to generate $100 million in cost savings over the next 3 years, while the company also divests some of its non-core brands. Hain has clearly embraced the need to slash costs and boost its profitability, and I think you could have a lot more room to run, especially since Hain is cheaper than the average packaged food stock now, despite having a much faster growth rate. We got to ask about that. That's kind of nutty to me. Don't take it from me. Let's check in with Irwin Simon, the chairman, president, and CEO of Hain Celestial, find out more about the quarter and his company's prospects. Mr. Simon, welcome back to Mad Money. Good to see you, Irwin. Have a seat.
Hey, Jim. How are you?
All right. Well, Irwin, something crazy happened. Some of these brands that have minus 1% growth and 1% growth and zero, they became valued and then overvalued versus yours, and now it looks like you're fighting back. What's changed?
So it's interesting. Every one of these companies, the consumer packaged good companies, would get out and talk about their products, but everything they wanted to focus on, we want to get into health and wellness. Health and wellness is where we want to be. You know, this whole GMO labeling, we want to figure out how to do GMO labeling. 99% of Hain products are GMO-free. Over 40% of our products are organic. You know, over 71% of our products have, 17 or 13 ingredients less. So we're there. And, listen, I think as the market's changed, we changed some numbers and basically, as you said earlier, the market fell out of love with Hain. Right,
it did. But you addressed it in a couple of things. For instance, you identified 4 underperforming brands that had been good brands, but not up to your snuff anymore, and you fixed them.
Listen, I started this company in 1993 from scratch. We went out and did over 55 acquisitions, but we stuck to a common denominator, health and wellness. Everything we bought was around health and wellness. Right. And listen, brands that kind of went out of our favor, we didn't focus on, didn't give the love, had declined, and they were still part of the portfolio. Secondly, as our business got a lot more complicated, we sell today in over 70 countries. We have 39 plants around the world. Our business got a lot more complicated. Right. So what I decided to do is, hey, let's call in some outside help. Let's look at our business.
Unlike you. Little unlike you to
Not
do
like
that.
me. People thought, hey, maybe he needs some help personally or whatever. And with that, I brought in some outside help and, to come back and look at Hain. All these big companies can go out and hire, zero-based budgeting, how they do it. So what I decided to do is, hey, take a look at Hain. How do we get to $5 billion? Okay. How do we simplify our business? How do we look at our plants? How do we look at our structure? And that's what we were able to tell today. And we're, as we look at our business today, we're going to focus on baby, we're going to focus on snack, we're going to focus on grocery, going to focus on our personal care business and our protein business.
Let's talk about the snacks. You double-digit growth. That's a big change. How'd that happen?
Listen, more distribution, innovation, and that's the big thing. And we're also coming off, this whole clean floor strategy that Walmart had in place. And
now tell people what that is.
Yeah, listen, Walmart wanted clean floors. They wanted no product on their floors. And our Sensible Portion had a lot of displays throughout the holidays in previous years, and they decided, hey, this is our new strategy. We did get placement. We did get placement in other parts of the store. So, a lot has happened at Hain. And I think, listen, the thing out there is everybody comes back and says, whoa, your brands that consumers don't know. The big companies are coming after you. They're going to put you.
They say he's going to have to start spending. That we're going to have to start learning more about Earth's best. Arrowhead Mills is up against some big guns now.
And Jim, step back. 35% of consumption today is coming from millennials. Millennials want clean ingredient and transparency, and that's something they do. Millennials trust our brands. And from a standpoint here is, yes, we're going to have to spend more money on marketing.
Yes, that worries people.
Well, the thing is, Jim, we're able to take costs out of our infrastructure, supply chain, and simplify our business, and those dollars are going to go back into a brand. But what I'll step back and say is this here. If you look at our categories today and you look at Hain, this is what consumers want. Bone broth, organic peanut butter, our Greek gods yogurt.
But this is Maranatha was one that you had to address.
Hey, we had to address it. The good
What
news,
was the matter with Maranatha?
The good news is almonds came down.
Right, almonds came down in price.
Prices
Almonds came down in price.
But I got to tell you, it's amazing when I'm out there today and in stores and how consumers are looking for healthier products. You know, I just came back from the UK. The third worry on consumers' mind over there, besides security and their financial whereabouts, is health and wellness. So health and wellness is in everybody's mind today. And Hain is right there with its products, with its categories, with its manufacturing and sourcing.
Okay, so when I look at the vast panoply of customers, mentioned Walmart, obviously we know Target. Where's Whole Foods fit in for you these days?
Listen, Whole Foods is our largest customer.
So if they don't grow, can you grow?
Whole Foods will grow. Whole Foods, you know, I know they just came out with earnings, and ultimately, listen, they're getting it together. They're centralizing their purchasing,
and that's good for you that they do that.
And it's really good for us. But it's not only really good for us; it's really good for a consumer. Sprouts really doing some great things
they
out
are
there.
doing some great
Independent naturals out there. Listen, Costco today is one of the biggest sellers of natural organic. Amazon, one of the biggest sellers of baby food. It is our biggest baby food customer today. So listen, consumers want natural products. I had a retailer call me and said, listen, we sell wine, cigarettes, and chocolate, and we're supposed to sell healthy products. Can you help me?
There you go.
Still
the ticket.
I've had fast casual restaurants. We want chicken only with antibiotic free. So, you know, I saw 7-Eleven announce today, we're going to cage-free eggs by 2025. 2025. Hopefully you and I are around by then.
Well, I hope so, but I thought that was a statement. So 7-Eleven is a statement.
Exactly. When 7-Eleven is going to that. So we're there with that. That's where Hain has been, and that's where we are.
Okay, then
that's where we'll continue to go.
And that's why I think it's going to go higher. That's Irwin Simon, Chairman, President, and CEO of Hain Celestial. It's spent enough time in the wilderness. It's coming back. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.